Operating expenses are increasing. Everything. Taxes, insurance is skyrocketing right now. Triple net does kind of become an issue where tenants are starting to, because they've got costs across the board. They've got higher rent, cost of goods, employment costs. And so they are going to start looking at the triple nets and trying to figure out if there's any way to at least hold the landlord accountable for the numbers they're providing.
Hi everyone, this is David Gellner with the Gellner team of Kidder Matthews. We specialize in retail investment sales in the Pacific Northwest. Today we're joined with Monica Wallace and Ryan Jones of Kidder Matthews. These two are some of the most prominent retail leasing brokers in the Puget Sound region. What we'll cover today is get a general update on the retail leasing environment and overall retail marketplace, some of the major opportunities for landlords and tenants in our space, and then some of the challenges we're experiencing today and how they're overcoming these issues. Thank you guys for coming here.
Thanks for having
us.
Appreciate it.
So just to start, Monica, how long have you been in the business? How'd you get started? And what are you focused on?
Yeah, so Monica Wallace, I've been in the business now since 2000, so I'm coming up on my 24th year. I got started because my family is a local developer, property management, and commercial real estate firm, brokerage firm. And when I was in college, I worked there as an intern, and I was a primatology major of all things. And I was like, I'm either going to go be Jane Goodall or I'm going to get into real estate. So I got into real estate. I loved it. My focus has been since then landlord representation of retail projects.
Is there any specific areas that you're focused on today?
No, it's more product type and client type. Well, not even client type. It's the Seattle metro area. I've done a lot of work on the east side. And then grocery anchored shopping centers and new construction mixed use are kind of my main focus.
Awesome. Ryan, what about you?
So I got into the business in 2012. Didn't really know much about commercial real estate. I knew I liked real estate, but growing up as a kid, I always thought of real estate as a residential game. Didn't really know who owned the shopping centers and the towers, so didn't necessarily get into retail by design. There was an international firm that had an availability looking for an associate and just jumped in head first.
Awesome. And any specific areas or locations that you focus on?
Yeah, it's always been retail. Pacific Northwest. Historically, I've covered tenant rep into Oregon and Idaho as well. I also do a little bit of landlord representation in the retail space.
Awesome. So in the investment world for the last 20 months, we've had a little bit of a slowdown. We're down about 80 to 90% overall, but I keep hearing about the fundamentals of retail remaining extremely strong. Monica, what are you seeing in the retail leasing world, just broadly speaking on your end? How have things been the last 12 to 24 months?
I mean, we're at a historic low in vacancy rate in the Seattle metro area right now. We've been leveled off for the last 12 months at about 3%. The national average is about 4.7%. So the retail market is strong. What I will say is there's a lack of inventory. So from a leasing standpoint, if you're a tenant rep, I'll let him speak to that. You don't have much leverage and you don't have many choices out there. As a landlord rep, it's landlords trying to figure out how they can continue to merchandise their project and then also leverage on the returns of the tight market.
For sure. With landlords or what you're focused on, I guess specifically on the inventory side, why do you think we have a much lower vacancy rate here than nationally?
It's geography. On the west, we have an ocean. On the east, we have a mountain range. To the north, we have Canada. So really, there's just a lack of land. We're not like Arizona, where we can continue to just build out and out and out. And the other side of it, too, is retail is not always the highest and best use for a property. If you're looking at taking up acres for some single level retail versus multifamily or office tower. Well, we won't talk about office, but multifamily towers right now. We're seeing a lot of the retail space displaced with towers.
Absolutely. And Ryan, shifting over to you, I know you work with a lot of tenants. What are you seeing in your world these days?
Yeah, it's a tight market for sure. Really, to be successful in the tenant rep game, you got to have really good relationships on the landlord and broker front. And stay ahead of the availabilities. Know when tenants are moving, know who your competition is, and really be able to lead your tenant in the right direction to the properties that fit their needs the best.
So is there any specific spaces, or what are tenants looking for these days when they're going into spaces? I know the inventory is very low right now. What's, I guess, the hottest in demand space to lease?
Second gen by far. Further to that point, restaurant. Depending on whether you're working with a restaurant or a soft goods tenant or a grocer, so on and so forth. Each tenant has their own hot buttons. So, understanding their business is really crucial. But generally speaking, just given the cost of construction, whenever you have a second generation space, it's a lot easier for that tenant to be successful.
Some listeners that are listening, they may not know what second gen means. Can you expand on that?
So basically, it's space that's already been occupied and built out. So, for example, a restaurant that's already was operating for a period of time and decided to move or vacate for whatever reason, leaving a vacancy for a new tenant to take over.
I saw one of your recent listings. I think it was a second gen restaurant up in Linwood, I believe it was.
Yes.
And I just noticed I've been doing this 13 years now. It seems like the triple net costs or the CAM costs have gone up and up and up. Are you seeing any pushback from tenants, or is that just kind of how it is right now with all the operating expenses increasing?
Yeah, operating expenses are increasing. Everything, taxes, insurance is skyrocketing right now. A follow up on the question you just had of what space are tenants looking for? Available space.
Yeah.
And so if you've got, for instance, a 4,000 square foot second generation standalone restaurant space, I'm not going to have a tenant have a problem with the triple nets there. What I'm going to have, I'm going to have tenants just trying to get the space.
Right.
In maybe some of the secondary type of projects, triple net does kind of become an issue where tenants are starting to, because they've got costs across the board. They've got higher rent, they've got higher cost of goods, they've got higher employment costs. And so they are going to start looking at the triple nets and trying to figure out if there's any way to at least hold the landlord accountable for the numbers they're providing.
And specifically with the restaurant space or food in general, are you seeing any, I guess, on the operator side or the business owner side of that tenant, are you seeing any challenges specifically, like if you're operating in Seattle or outside of the Seattle metropolitan area, in noticing any differences specifically, like with minimum wage or labor?
So minimum wage has, labor is always an issue. In fact, it's kind of interesting. We're starting to see more leasing activity happen in some of those primary suburbs. So Linwood, Tacoma, et cetera, because the cost of living is such that it's manageable for employees. So if you open in Linwood, you're going to probably have a bigger employee pool than if you're in downtown Bellevue. In downtown Seattle, you bring up the minimum wage. That's causing ripples throughout the entire market, because if you can go into Seattle, which is served by light rail now from some of those secondary suburbs, you're now going to be competing with Seattle because employers are going to want to go work for minimum wage. So we are starting to see a trickle down effect into some of the suburbs that maybe the minimum wage is less. They're still having to compete.
Totally. Ryan, would you convey the same thing? Are you seeing anything?
100%.
Yeah.
100%. Labor is always a big one, especially for a new company to the market. We're working with a new retailer that's looking to break into the Washington market. They don't have any locations up here without disclosing who they are. I guess the conversation we had just earlier this week actually is about how we want to cluster our first few, and we're choosing a very specific market. And for the first one, and the second and third location will be no more than 3 to 5 miles from those for labor purposes.
So it seems, being in this a while, always when I hear and speak with my friends like you guys in the leasing world, a lot of tenants want to come to this market, and it seems like a large portion of those tenants don't have success penetrating the market. Any specific reasons for that?
Absolutely. I see that as well. It's a big cost thing, and even more so inventory. Mm-hmm. Yeah.
Monica, any thoughts on that?
Yeah, I agree. If you're coming in, first of all, we're in the Northwest. So we've already kind of talked about, we're kind of tucked up. So we're a very strong market, but for you to get into this market, you need to have a pretty substantial penetration plan, which is very hard when you can go to Arizona and there's going to be 20 spaces that are going to fit your criteria within a sub-market. You might not find 4 in an entire market here.
Yeah. Mm-hmm. Yeah. I've noticed that just on the investment world too, is, especially for B or C class shopping centers, no one's building that anymore, right? Like it just does not pencil by any stretch of the imagination. And so our comment to investors who are interested in those properties is, look, this is likely going to be one of the very rare properties like this, a mom and pop shopping center in the Puget Sound, because it is so difficult to build here. You mentioned tenants, unknown tenant coming into the market. Who are some of the favorite tenants, or I guess give me one specific tenant if you have one that is your favorite tenant right now? I know it's probably got to be one of your clients maybe, but
you know what? So I don't play favorites. I'm going to leave my clients out of this.
Okay, there we go.
I've got fantastic clients. I love working with all of them, and to a point where I get to choose who I work with, and I truly mean that. In terms of new tenants to the market, I really love the experiential side of things. Some of these like Sandbox VR, kind of cool. Haven't done it yet, but it looks fantastic and it's exciting.
I don't even know what that is. What
virtual reality.
Okay.
Yeah. They have one at Center Cal's project up in Totem Lake.
Okay.
And also Vulcan's project down in South Lake Union.
Cool.
But the first thing I thought of is Chick-fil-A. It's like, okay, I don't even eat there, but it's a fantastic tenant. It's an exciting new brand. I remember when they first came here, all the buzz around it was just fantastic, and it's cool to work with that group as well.
And I think their real estate, at least their play, is A+ locations. They've done it really well, in my opinion, over the years of just taking quality locations, and then everything else takes care of itself.
Absolutely.
One tenant that you're excited about these days?
Yeah, I think experiential is kind of the way of the future right now. I am really liking these tenants. There are a few of them. There's Tapster is one of their self-serve. And so in a way, or Karu Sushi. So it's nice because you can go to Tapster, for instance, you sit down, you have beers with your friends, you serve yourself. And so you get to decide what the service experience is, but you still have a place to gather, which to me is very important. Having placemaking, especially these days, is so important. So if you can create a place and create a product, but let the customer decide how they're going to use that, I think there's some value in that. And I also think there's value in it from, once again, the employee side of things.
Because labor is so difficult.
Exactly.
Right now.
Exactly. So I'm excited to see what types of concepts are going to be coming online that are more self-serve.
Totally. So kind of pulling back the lens, talking more about markets in general, is there one market that if you could bet everything on for the next 10 years and just kind of cement yourself, what's your favorite retail market geographically?
Geographically, definitely Bellevue, East Side, Greater East Side as well. And not necessarily urban versus suburban. I think that overall the East Side is very strong downtown and in the suburban markets of, Kirkland, Redmond, Issaquah. Yeah, really bullish. There's a lot of retailers that are looking for their first location, and they're choosing Bellevue.
Yeah. Hard to go wrong with the East Side. I hear it every day, like, oh, we want to buy an East Side property. And it's like, there's not a lot to buy on the East Side.
Right.
So what about you, Monica? Same answer.
Yes.
Yeah.
I will say to both of your points, because everyone's looking on the East Side, I do think Seattle is going to start having a resurgence, especially with the new waterfront that's gone in. Pioneer Square is already starting to see some entertainment tenants coming in. So I think Seattle is going to come back, which is very good for both. Rising tides, rising ships.
Yeah.
But now this is very non-committal, because I also think that the suburbs to the north and south have a lot of value to them, especially as they continue the connectivity with the light rail.
Yeah.
So I do think, because there still are some open air shopping centers out that way that maybe will have some vacancy come up, I'm bullish on that too. I guess the Seattle metro market is really strong. How can you go wrong? We're one of the top in the nation as far as vacancy rates, and we're at an all-time low.
Yeah. No, I'd agree with everything you guys said. I think what I've seen on the investment world side is, say, the first 10 years of the business, everyone wanted to be in Seattle or close to the core as possible. And we've seen kind of a rotation to the east side and then the suburbs, where now investors are migrating out that way. And I think because of what you both mentioned is, capital moves and flows where it's ideally treated best. And I'm super hopeful that Seattle will, come back better than ever. So I guess shifting to product type, and I like mom and pop shopping centers, B and C class product, working with a bunch of developers. The construction cost challenges have really limited any new development. I guess, is there anything that tenants look for specifically, Ryan? I guess this will be for you, is what are tenants looking for when they're leasing a space? I know there's no vacancy, very little vacancy right now, but if I were a landlord of a B-class shopping center in the suburbs, what are some things that I can do to make my space, the most attractive to potential tenants?
Yeah, I mean, each tenant is going to vary a little bit, but generally speaking, the same things are important. The same 5 or 6 things are important for everybody. And that's like access, visibility, parking, signage, which also plays into visibility as well. Co-tenancy, that's important as well. Taking advantage of signage allowances from cities to get the maximum signage for tenants is a good move as well. And low rents.
Low rent. Low rents never hurt, right?
Yeah, sure.
So I'll ask a different question for you, Monica, because you're on the landlord side mostly, is what do you see killing most deals right now today? Because I'm assuming you're getting a lot of offers. What can a tenant do to make themselves most attractive in this environment?
That's a great question. So what I'm seeing kill most deals is twofold. It's construction costs. If you've got a gap so wide that the tenant and the landlord can't figure out how to fund it, then it's going to be hard to get a deal done. So, and that is kind of tied to the access to capital. Cost of capital is very high right now, but access to it. So I'm seeing that play a pretty big role on getting deals done. So if I'm a tenant or if I'm a landlord and I've got 4 different offers, which on the good spaces, we're still getting, like the project you brought up, it had to be 9 or 10 offers on it within the first couple of weeks of it going on the market. Wow. So really what we look for in that situation is who's most probable to actually sign the lease and who's going to be a good fit with the overall tenant mix, and how secure are they? I mean, are they going to be successful enough that they'll be able to pay their rent?
Yeah.
And that's really, so it all kind of comes right back to the economics and access to capital.
So I've been hearing from my developer friends and clients that, we're seeing tenants say, hey, I'll pay whatever rent you want. However, the tenant improvement costs, we need that money. Is that kind of what you're seeing as well?
Yes, we are seeing that. For the good sites, a lot of the landlords, they need access to capital a lot of the time too, and it's costly for them. So if they're able to access it, they may do that. But then they have to feel really comfortable that tenant is going to be able to stay. I mean, it's great if you're willing to pay $75 a square foot as long as you stay for the 10 years. Right. If I gave you $75 a square foot in tenant improvement allowance and you leave, I'm not going to be able to get that rent from somebody else for your improvements. So we are seeing more and more of that. It's just whether or not it makes sense. I mean, if the landlords look at it, they'll take the offer that doesn't have it, with the one caveat that if they're selling soon, it could look really good on their capitalization rate.
For sure. I mean, one thing I like to recommend when I'm working behind the scenes, say a vacancy is getting filled, is, as Monica indicated, guarantee making sure the tenant's going to stay in there, not just pay the highest rent possible. One thing I always recommend is, hey, we need to have visibility into store level and especially like company level financials. I know with corporate, a lot of the times that's difficult. If they're not publicly traded, they're kind of in that before stage. Are you seeing any tenants push back on that? Or what would you say as far as if a landlord came to you and said, hey, we're going to have to see store level visibility here?
Yeah, it's asked for more often than not. That's for sure. When there's a landlord contribution, that is. If it's an as-is deal, then what's it to you?
Yeah.
But typically we like to get down, very mature in the LOI process before, we go ahead and disclose confidential information. Always have to have that confidentiality agreement as well teed up.
Well, let me ask you this as a follow-up, because I'm seeing it a lot of questions coming in to me is, hey, what is the standard rent increase now? Because we were at such a low
flat for 5 years.
Yeah. Is that what you want? What about you, Monica?
4% annual.
Yeah. See the divide and the gap.
2 annual.
And that's something I have so many conversations on, because for, take out the last 3 years and go all the way behind, we were seeing, 5-year increases at 7.5%. And it's like now It's almost needs to be 7% annual, it seems like. That's an exaggeration. What are you suggesting for landlords? Are you doing like a CPI based? Is it all dependent? What would you suggest?
No, we're still pushing for annual increases when we can. If it is flat, 5 years flat, and from an administration standpoint, for landlords and tenants, sometimes the 5 years flat works because then they can, everybody knows what it's going to be.
Yeah.
We don't see a lot of CPI. It's way too hard to manage and keep everything. We don't see a lot of that. For good tenants, we'll definitely do a flat. What I am seeing is in the past we would have it 5 years flat and then a 10 or 12% increase. We're starting to see that increase from year 5 to year 6 be a lot larger.
Yeah, totally.
Going back like 10 years, I did a lot of renewals, several renewals, and they were, deals that were done 20, 30, 40 years ago. And there was a ton of CPI language built into those. But then I didn't see it until within the last 12 months. And now I've worked on 3 or 4 deals that have had CPIs tied to them.
Yeah.
But to Monica's point, tougher to calculate. It's much easier if it's just stated in the lease. It's going to go flat for 5 years or 3% annual, whatever it ends up being.
When you structure that, are you typically having a floor and a ceiling put in?
Yeah, certainly. I mean, the landlord wants to never see the rent drop below the prior year's rent.
Right.
On the flip side, as a tenant, we don't, if market for some reason is today at 40 and in 10 years when the renewal's up is going to be at 30, then we want the freedom to lower the rent. But an option at the end of the day is a tenant's benefit. So
yeah,
landlords are pretty tough to talk into on that.
For sure. One question I get a lot and try and help educate, because I do all the landlord side, that's my main focus, is option periods. So it seems like there's a lot of questions about option periods, how they would benefit a landlord. It seems like in the past, there used to be a lot of fair market value language, which if push came to shove gets a little complicated. Are you seeing any changes, Monica, to the option period language, how they're written today? Any suggestions for landlords that may be working on that language right now?
Yeah, definitely. So options are never to the benefit of a landlord.
That's what I say too. So.
If you've got a tenant who gets to decide whether or not they stay or go, the leverage is never with the landlord. So what we always try to do is the, if there is an option, the rent's never going to go backwards. So if a tenant is going to exercise that option, they're going to need to go forward. And so we'll say, in no event less than 3% or whatever our annual increase has been is what we generally try to do. Because the reality is, if it goes from $40 a square foot down to market of 30, the tenant's just not going to exercise their option. And then they're going to still have leverage, because if it's truly a $30 space, the landlord's not going to want to go re-tenant it.
Right.
And so that's what I'm seeing. And I'm seeing both landlords and tenants being okay with that, because of the very reason that if it really has landslid, there's going to be leverage there.
Totally. How do you view option periods when you're representing a tenant?
Absolutely mandatory. You've got to have them. And there's a lot of landlords pushing back. If you're doing a 10-year term, then you should at least have 10 years full of options. Landlords want to give you one or none.
Yeah.
So I think that they're absolutely mandatory when you're putting, depending on what tenure you're working with, they're making a substantial investment in the space, and they definitely need the option to stick around.
Gotcha. What, I'll ask a follow-up to that. What's the hardest space to lease right now?
I'd probably say first generation mixed use. Yeah.
Why is that?
Actually, definitely first generation mixed use, not probably. I guess generally it's a relatively newer product type to the Northwest. Further than that, retailers are, especially in our market, they're accustomed to being in a single story surface parking environment, nice wide open with a ton of parking, right? But you get into mixed use, and first of all, you lose prominence, right? You got this big building that you're looking at, and you don't always notice the ground floor retail, even though that is kind of the face of the building, right? Mm-hmm. So it's important to have a prominent facade. Yeah. And then parking. A lot of the times, in urban environments, the parking that's provided, and maybe it checks the box for the code, but if you're a restaurant who has 80 seats inside there, and there's only, there's not going to be, depending on the project, you probably don't have 80 stalls. If it's a smaller mixed-use project, then you're going to run into issues.
Mm-hmm. Monica, what's the hardest stuff to lease right now?
Well, I am a mixed use retail broker. So, no, I agree with Ryan is, poorly designed. Mixed use retail is tough right now, first generation, for a number of reasons. And it's not always poorly designed. Sometimes it's poorly located. It's not only the construction costs, which are very high right now. Most of these spaces are delivered with no air conditioning, no electrical, because they want to have a blank slate for the tenant to come in.
Right.
But that's a huge construction cost, and who's going to pay it? The landlords. Gone are the days where I can't believe that even like 7 years ago, as a landlord broker, I would be able to do a gray shell space, which is once again one with nothing in it, get pretty good rent, and offer $40 to $50 a square foot in tenant improvement allowance. Wow. Today, that gets someone their air conditioner.
Yeah.
I mean, it just doesn't pencil anymore. So that's one piece of it. There's also another piece of it is, if the landlord didn't take into consideration their front door, then it's not designed well, and that makes it very hard.
Right.
So it has to be well designed if you're going to do it. And then just jurisdictions have some very interesting codes related to their mixed use and what can go in there.
Are you seeing, either developers who are coming out of the ground with mixed use projects? Are you seeing, and I'll just focus on Seattle because I think this is more of a Seattle thing. When I lived in apartment buildings and there was ground floor retail, that was super meaningful on why I chose to live in a certain spot. Are you seeing that become more prevalent or?
Oh, yeah.
Okay.
And not only in Seattle, on the east side. Right now I'm working on a project in downtown Redmond that is well designed. It's got great parking. It's right across from the downtown Redmond light rail. And the landlord is we've been marketing it for 2.5, 3 years, not because we've got dozens and dozens and dozens more proposals than we have square footage. They're being very picky about the tenants that are going in there because they do realize that it's once again, the placemaking piece of it. It's what's creating the sense of place.
Right.
It's
the
not
synergy,
the 5 stories of apartments above.
For sure. Shifting over to kind of mid or big box space, I guess I'll ask this question broadly is, we're pending the Kroger merger potentially, right? So that could create a ton of, medium and big box space. And Ryan, I know you're working on a lot of, former Rite Aid and Bartell drugs right now in the Puget Sound. How's that going? What's the tenant type look like that's backfilling that? And if I owned a Rite Aid or a Bartell's or a drugstore and was concerned about re-tenanting that, what would you say to me?
Yeah, it depends on where your property's located, first of all.
Yeah.
Don't want to get yourself in a situation, just to get a listing where, it's maybe a tougher assignment than you initially thought. But to your point, we are, my team is leasing a handful of vacant Rite Aids and Bartells. And for the most part, we've been really successful. In one, we leased it to a veterinarian clinic, a fitness facility in another, and we got a couple others that we just listed on the market. And generally speaking, in that 15 to 20,000 square foot range, call it, because that's what majority of them are sized at. There's a lot of activity in the fitness game, in the grocery game, educational uses, big national schools and daycares and whatnot. There's some discount retailers as well. They're taking a swing at these boxes as well.
Yeah.
But in terms of advice for owners of this real estate, I know that they're being approached by Rite Aid with offers to reduce rent or blend and extend or, a variation of both. I would say you just got to talk to somebody, talk to a leasing broker and, really understand your property, where you're located, what tenants are already there. So who you could potentially attract to your property and the viability of doing that. Maybe even shop it to those tenants before you make a decision to accept an offer or decline an offer from Rite Aid.
100%. That's the guidance good to hear you say that, because as soon as I get those calls of, hey, Rite Aid wants to reduce rent 50%, it's, you got to go talk to Monica or Ryan. Let's see what market rent is, backfill options, because we've obviously seen a huge spread depending on location on what type of tenants and what the rent looks like. So are you seeing any, I've seen, not in our markets, but I've seen elsewhere in the country, like some pretty significant repurposing of these former drugstores to like car washes and stuff like that. Are you seeing or hearing any groups try and do that?
No, I haven't. Not for the Rite Aid Bartels, but I did just catch wind of, I think, a former bank getting repurposed to a car wash, which was wild.
Yeah.
But that was by design. Apparently, it just cut down their permitting timeline significantly. But for the most part, I mean, it's pretty. It's situational. It's going to vary. And what I was going to say previously is that these properties that have been built, build to suit rather, for specifically Rite Aid or Bartels, we've seen a lot of situations where they're paying a rent over market, right? So evaluating that rent and what it means to chop that in half compared to what market may be. I've seen a couple situations where it's actually a pretty good economic deal to accept that rent reduction. And this is in a specific instance where I thought it was going to be very hard to backfill the space that was left over. So it was a good idea for the owner. They actually made the decision on their own and then came and told me about it. And I said, that was a great decision, and this is why.
Totally.
They're paying a rent that's way too high. I think they renewed maybe in the high teens or right around 20, and I didn't think it was worth quite that.
Yeah. So Monica, I'll ask the question a little different because I know you work with a lot of grocery anchored centers, and it, historically speaking, every institutional investor always wanted grocery and drug, right? That's what everyone wanted. That's kind of the tried and true shopping center. I guess specifically on grocery, are you seeing, how important, or has it changed at all from the past on having a grocery anchor? And let's just say worst case happens, that grocer vacates or goes out, and let's say you re-tenant with a trampoline place or maybe a little better tenant than that. But what are your thoughts on the current grocery space, how important it is for landlords? And
I think it's very important. Having an anchor that serves the daily needs of everyone. Everybody needs to go to the grocery store. Maybe it's not that grocery store, but it might be someday. Not everybody needs to go to a pickleball court.
Right.
So I think it is absolutely essential. It'll be interesting to see what happens because, once again, we've got the grocer and the drug. So if we're re-tenanting the drug, start thinking ahead of who you're re-tenanting the drug with to make sure that your grocer continues to be viable.
Yeah.
So try not to re-tenant the drug with something also that could be less beneficial to the grocer. I'm thinking, for instance, I know that even though medical right now is a little bit soft, I'm seeing a few of the medical groups go after some of the drug in some of the grocery anchored centers. I think that's good. I think it's a traffic generator versus putting a trampoline center or something like that in the drug. So I think grocery is still very important. We can hopefully live without the drug. It will be interesting to see how these are all backfilled in the grocery anchored centers, but grocery's still pretty key to a tenant.
One question that just came to mind is, and I'm thinking of a specific center, I won't name names, but CC&Rs, right? Mm-hmm. So that's something, especially for new shopping center owners, they may not be super familiar with CC&Rs. And I just, from my lens, high level lens, I see that kill a lot of potential really, really solid lease deals because certain tenants have these broad-based CC&Rs. Any thoughts on that, or things that landlords can do, if they're stuck now, maybe in the future? Any guidance?
Yeah, we run into that a lot. And a lot of it happens from the development standpoint. The developer, has his anchor center, and then he's got his pad sites or her pad sites. And they want to make sure they've protected all the deals they did. It really starts with the developer. So if you're stuck in one of those triple net deals that's got the CC&Rs, have somebody look at them. Like, for instance, I had a landlord of one of these triple net buildings call me and say, yeah, my leasing agent is telling me the CC&Rs are killing every deal. They weren't. They weren't killing every deal. Yeah. They were killing the deals that they were focusing on. So just making sure that the landlords get a quality leasing broker involved is a big piece of it, because we've been around the block. We know where you can kind of figure out a way around, not around the actual CC&Rs, but be creative with your tenanting.
Totally. Any comments on the
Yeah,
CCNR.
I totally agree with Monica. I'm just thinking of this one very difficult situation I was in the last couple of years where the shopping center was built, a long time ago, and some of the CCNRs were written for old ways of thinking. And, the one I think of is it excludes bowling, for example, when a bowling alley today, a quality one like a Lucky Strike or Bolero would be well received today, maybe not in the past, but yeah, I've got pretty deep into the weeds with CCNRs and reciprocal easement agreements, all the prohibited uses, and in this one specific instance that just ended recently, there was a lot of blocks, and it was a very big challenge. There was not many use categories out there that you could even market to, and the use categories that we were subject to just weren't high rent payers. So
yeah.
Something you
Gotta
definitely
watch
as
those
a
CCNRs.
yeah, if you're gonna list a property, that's one of the good qualifying questions up front to ask.
I'll add to that. That reminded me of something, is encouraging a landlord to have really good relationships with the other owners and any tenants. For instance, there are some grocers, this brought back some PTSD for me. There are some grocers who literally, if there's a change of use any change of use in the shopping center, they will have it'll be subject to their approval.
Yeah.
And so once again, there's a project specifically I'm thinking of. 10 years ago, their broker said, well, we can only go find another dance studio because that was in there. No, there's another way around that. It's going to that tenant who has all this power and saying, hey, this isn't going to be a dance studio anymore. Are you okay with that?
Yeah.
And they were. And so it's just having good communication and relationships with the tenants and other stakeholders.
So with
Owners too,
for
just
sure.
to tack on to that. So the situation I was in, there was less than a dozen, more than 5, don't want to single out the property, but less than a dozen, more than 5 owners in this entire complex. And we got approval from all the owners in the whole complex. And even the final owner, their tenant was agreeable. But for some reason, the owner was not. So relationships are key.
I was gonna, I guess I'm thinking of a scenario, or what we're seeing in the investment world is like there was a handful of Family Dollar and Dollar Trees, where they're being built as one individual building with 2 entrances, and obviously Dollar Tree owns them both. But I thought that was interesting in the last 5 years, because why would you have 2 dollar stores right next to each other? And what they've been saying is, they feed off of each other and actually generate higher sales. I'm thinking of a situation where, let's just say grocery outlet, they're a unique grocer in our market. And there's a more traditional grocer that wants to go into a very large center and they won't allow it. Are you seeing landlords in negotiations, Monica, with the market being so favorable to landlords right now, strip out some of those CCNRs in negotiations, or is that kind of not a super important point at this time?
Well, in new leases, as far as like stripping out the exclusive clauses and things like that. Yeah, we're seeing them get a lot less broad.
Yeah.
Is a way that would probably be the best way to put it. And that's with the larger tenants and with the smaller tenants. So, most landlords aren't going to put an ice cream shop next to an ice cream shop.
Right.
So yeah, we'll give you the primary. I mean, if somebody sells a milkshake as part of their it's like 4% of their gross sales, then that doesn't count. So it needs to be primary business and very specific. Yeah, we're seeing more of that. But we are seeing, if we do give them, they need to be very specific. And then to your point with the grocery versus grocery, yeah, we're starting to see, we've seen it for a number of years now. A good example is a QFC center with a Trader Joe's. Right. They feed off each other. There are things I go to Trader Joe's for. There are things I go to QFC for. Totally. I'm going to go to QFC instead of drive across town to Safeway because it's right here.
Yeah.
So we're starting to see tenants be a little bit more reasonable on what's complementary versus competitive.
Totally. Any thoughts on that?
Yeah, the thing I think of is I read a research piece not too long ago that was talking about how expensive groceries have become. And due to that, people are bargain shopping. And I don't have the exact stat, but essentially frequency to grocery stores increase, And the number of grocery stores that consumers will visit as well has increased in order to find those bargains.
Yeah. In my world, shifting subjects to drive-through, because everyone wants a drive-through. Investors love drive-throughs now. I think we learned that during the pandemic, where if you can have a drive-through, you can still do a good chunk of business out of that. How much demand are you seeing from tenants for drive-through?
Massive,
Yeah.
definitely. I mean, that's one of the hot products, especially since 2020, when you couldn't go inside of a space.
Yeah.
So that's continued, and drive-throughs will always be strong. Yeah, it's paramount.
Would you agree?
Oh yeah. When I have a client go, should I? The city says I can do a through here. Should I? I mean, there's not even any question. I'm like, absolutely do it. We'll find a tenant for it. A lot of the tenants are shifting, from doing traditional either grocery anchored centers or urban street front to only doing drive-through.
Right.
And so, yeah, I mean, it's great. It gets you're going to get multiple offers, very good offers if you've got a drive-through.
Yeah.
And premiums on rent too.
Yeah,
Totally.
exactly.
Yeah, we're seeing a Starbucks roll out just kiosk only models now in their store footprint. So it's going to be interesting to see how they compete with everyone else, for sure. So Monica, what are some common, or let's just do the number 1 and 2 mistakes landlords make that can be super detrimental?
So it's going to sound self-serving, but not hiring a good broker.
Yeah.
I'll start with a story, actually. A couple of years ago, there was a building owner who was an independent individual who was very, very proud of the fact that he didn't need to use brokers to find tenants because he did have a great site. He had a fantastic site. Okay, great. I think I could bring value, but you go for it. Fast forward 2 years, he found a great tenant who has their rent commencement tied to them getting a permit. They're not even close to getting their permit.
Yeah.
And this poor landlord is just held hostage by this tenant. He's, he can't make any long-term plans. He can't do anything because he didn't have anyone advising him.
Right.
So I would say having an advisor, and not only a broker, but also a great attorney are I get that they're expensive. I get that we are not free, but don't be penny wise, pound foolish about it either.
That's great.
So that's my number 1. Number 2 mistake. Yeah, I think number 2 is not getting a good legal consultation.
Advice,
Yeah.
For sure. I guess I'll quickly follow up. What makes a great broker? Leasing broker.
Well, first of all, somebody who's known in the market and has relationships, who's got tenacity, who will call, not just put what do they say? The age old, they put a sign in the window and wait for a call. That does not work in this. I mean, it might, but you're not going to get the tenants you want. And so having a broker who has relationships with tenants you want, and then having a broker who has experience, who's been through and seen the consequences of someone not having an outside date on a permit.
Right.
So having the relationships and the knowledge of the market and how lease terms are negotiated.
That's huge.
Said perfectly. Having a good broker resource is crucial.
Yeah.
Someone who will do the extra work, somebody who will really get ingrained in your business and understand what you need, not just the high level real estate, not just somebody who's going to send you everything, but somebody who can do quality control on your behalf. And that takes a while to get there because some tenants don't want that. It takes a little while to gain their trust. And in the long run, it makes for a smoother process, more successful process, and you don't waste their time. Basically, is what it comes down to. Don't waste your client's time.
I mean, I know we're all biased as brokers, but I would echo that just because times are good right now, especially in the leasing world. But when times get tough on the broker side, working with a broker, seeing something with a broker that is reputable and has those relationships that you like and trust them and know that there's not going to be any hair on the deal that's not disclosed on the front end, because none of us like to waste our time or the client's time. I mean, it's just super critical right now. I like that feedback a lot. So Monica, with the rise of DoorDash and some of these online delivery services, are you seeing that dampen the demand for drive-throughs or other retail product in our space?
No, definitely not, because we're still last mile with DoorDash and Uber Eats, et cetera. What we are seeing is that the building owners need to take into consideration that is the DoorDashes, et cetera. They need short-term parking for these services. There's a specific tenant who is in Seattle, and this is their number one. It's a food use. It's their number one location, and they are having a heck of a time because they don't have anywhere for their Uber Eats or DoorDash tenants or drivers to come pick it up. And so their quality is going down or an Uber Eats just won't come and they won't take that assignment. And so what they're doing now is in some of their newer leases saying, yes, we still want to be here. We have to have somewhere for the DoorDash to park. And so landlords, the smart landlords, aren't saying no, they'll have to figure it out. They're saying, okay, yes, what can we do?
What are you seeing, Ryan?
Same thing. Absolutely. Yeah. Well said.
I guess to follow up that question, electric charging. So seems like it's becoming more and more prevalent. Are you seeing any tenants ask for that specifically now, or any landlords really try and bring that in to their centers? Any true benefit at the moment? What are your thoughts on that? Because I get questions actually more on the government commercial property side, where they're really pushing, to have an electric charger set up on their properties for their employees. Are you seeing anything on the retailer side or landlord side?
It's all over the board.
Yeah.
I have some landlords who are getting additional revenue from it. So then it is something like, oh, great, I'm getting additional revenue from it. They also, we'll have to see, but they're also thinking, because they have the charging areas on the side where the restaurants are, maybe those restaurants will do better because now people are charging and they're having to go into the restaurant and wait. So, I think the jury's still a little bit out on that. I think from a convenience standpoint, customers like it. And I think the added revenue, the landlords like it. And I think it's going to be important. I mean, it's kind of something you got to do at this point if you're going to be especially a larger grocery anchored center or a mixed use, obviously, because you've got residents there as well.
For sure.
I think it's a good investment in a property. I mean, there's a big power requirement that you need to bring into the parking lot, and that can be costly. But there are a lot of end users or, charging companies who will pay per stall. And sometimes some of those companies will bring in the power themselves. So I think it's a fantastic dynamic to bring in. And, I don't have an electric vehicle myself, but I know that they take a little while to charge. So I think it's common that, if you're waiting for your car to charge, you're either going to be on your phone or taking a look around outside, and hopefully the latter.
Other than additional revenue, it could be a good way to separate yourself if it does become a competitive environment for a landlord of, hey, we offer charging, and I'm sure consumer patterns will change. Talking about DoorDash and electric charging, it brought me back to 10 years ago when the internet came down with online shopping. It seemed to really become prevalent, and the famous phrase, retail is dead, which is laughable now. But when we were sitting there 10 years ago, I was frankly pretty nervous about it because I couldn't see how retail would evolve like how it has. And I think it's just super incredible. I think retail has become a much better product overall. I think our industry has gotten stronger. And hopefully the same happens for our office colleagues and landlords, and hopefully they'll have the same process. My question, I guess I'll start with you, Ryan, is where do you see, let's just cast out 10 years, where do you see retail going, changing? What do you think is going to happen?
Good question. I wish I had a crystal ball.
Yeah, me too.
A lot more experiential, convenience for sure. I don't see grocery ever going away. I could definitely see a shift into some of these stores turning into a distribution center of some sort, where there's a lot more space allocated to inventory and storage, and maybe the sales floor is more of a display, right?
Kind of like Bonobos, the clothing store, where you go try it on and then they ship it to your house.
Exactly.
Yeah. That's good. Where do you think retail is going to go in 10 years with your crystal ball?
With my crystal ball?
Yeah.
I mean, we're not going to get more land unless for some reason the Cascade Mountains goes away. So,
Yeah.
so in the at least in the Pacific Northwest, I think that we'll continue to see a tight market. We're also probably, knock on wood, I hope I'm not jinxing us, we're going to probably continue to see more population growth. We are still considered one of the stronger markets in the country on many levels, economies in the country. So I think in the Pacific Northwest specifically, I think we're going to continue to see just strong rents. We're going to continue to see retailers reinventing themselves to try to not only serve, our age groups, but also the Gen Zs coming up who do crave experience. So I think we'll continue to see more experience and just tight market is what I see.
So I'll play devil's advocate here. What is the biggest threat to a healthy retail market?
A pandemic? No.
Yeah. Don't say that again.
No. I mean, it's really consumers not spending that's what retail is. It's consumers spending.
Yeah.
And it's consumers spending in some level of physical, at least for non-online, right?
Yeah.
For physical retail. So I guess the biggest threat is for consumers to start tightening up their pocketbooks, or for online retailing to somehow undercut the experience, which I don't think that's gonna. People crave experience.
Yeah.
So.
And it seems like retailers have done seems like from my lens, retailers want to integrate the online experience because having a brick and mortar location is the separate. Everyone can have a website now. Everyone can do online shopping, but brick and mortar, especially in our market, it's hard to get.
Exactly.
What scares you on retail?
Cost of goods sold, first of all. I mean, that's a huge scare factor, I guess you could call it. I was just thinking, like, one of the ways, like when the retail is dead news came out, I really started thinking about my business long term and what I was going to do. And I got an opportunity to work on some other verticals of commercial real estate for one of my clients. I really liked it, really enjoyed it, like switching it up. If I just did one thing the rest of my life, I'd get really bored. So it actually got me into a situation where, like, for the past 7 years, call it, I've been able to help my clients across their industrial requirements and their workplace solutions. Yeah. And that's kind of helped me weather the storms in tough times.
I think for me, that's, retail, we can obviously sell apartments or office or industrial, but retail is so fun because it seems like every center is so unique, right? All the tenants, the traffic flows, how they were built, the stories. It's just, I've never sold apartment buildings, but it's like almost every apartment building's kind of the same, a little simplistic. So I think retail is a great industry to be in long term, and I'm excited for the future.
It's the most interesting in my mind, for sure. When family and friends have asked, what do you do? It's like, well, I work on real estate, all the places you go to shop, eat, be entertained, essentially.
Can you key in on a scenario where something changed dramatically at a property or for a tenant where had to rapidly change use or evolve, and how you were successful?
Sure. We're in the process of one right now, actually. One of our clients who owns a lot of real estate, but they only have one retail asset. It was a Rite Aid leased asset, which was once the gold standard, just a coupon clipper, as they like to call it. When Rite Aid went bankrupt, they didn't think that this was going to be on the initial closer list. And that, in a 5-day period, that changed. They got their notice, the store was cleared out, keys dropped off, and the cash flow shut off. So my team was able to, we have a really great marketing team, and we have a process we go through, but we were able to market the property. We had a ton of offers in the first 3 weeks. But the tenant we landed on was a forced relocation due to redevelopment, and they were in a really tight spot to identify space quick. And their business type, highly profitable, could afford a rent that actually replaced and eventually will exceed what Rite Aid was paying.
So other than the tenant's dramatic need, what are some things that you guys did to really pull them in and make sure they chose your site?
Well, I mean, really leveraging the other deals that we have on the table. This was back at, fourth quarter of last year. I wouldn't say the demand has changed much since then. It's still very high, but we did have genuine interest from a lot of tenants that would just take the building as is at a very high rent. So, we just leveraged other deal terms.
For sure. Mm-hmm. Monica, any scenarios come to mind for you?
Yeah, I mean, the last 4 years has been a scenario.
Yeah.
So we have 3% vacancy. It went up a little bit with the pandemic, but what that did was, you've got, as a landlord, once again, with a landlord hat on, through the landlord lens, you may have tenants who are either underperforming. They were already underperforming before the pandemic and before the rise in interest rates. This allowed landlords to go and re-tenant some of their buildings. Once again, we're at 3% vacancy. So even a failed tenant where maybe they're like, oh no, this is a failed tenant, that could be a great opportunity because, specifically exactly what Ryan said, we're able to go out there and maybe find a tenant that's a perfect fit who also you can leverage other offers to get the rents sometimes a lot higher.
Yeah.
With a much stronger tenant. So there's, with all threats, there's opportunities.
Yeah.
And one of the opportunities is to re-tenant with a stronger tenant and higher rent.
For sure. I think that to go on top of that is I see a lot of times a hesitancy, especially with mom and pop ownership, where they don't necessarily want to reach out and ask leasing brokers of, hey, what is the market? Or, hey, this tenant may be struggling. It's easier to renew than potentially go out and add a new tenant or find a new tenant, but would always suggest, at least see what's happening in the market, because you never know. And especially now, our market is so strong. It's incredible.
Well, yeah. And calling a broker, I mean, the right brokers, it's a free 30-minute conversation.
For sure.
Where a broker can look at the situation and tell you right away. Maybe not right away, but at least be able to say if it's a good site, they're going to know it's a good site right away. But they can help evaluate whether or not it's a good situation. And if it's a trustworthy, good broker, they're not going to have you terminate a lease with a tenant to go find you a worse deal.
Right.
So if it's a trustworthy broker, please reach out so that you can know. And I can say many times I do say, you know what, you got them in there at a good rent. They're still paying rent. Mm-hmm. Hold on to them.
Yeah.
So
relationships are everything.
Yep.
Just hearing that is such a relationship business. It's incredible.
True.
Monica, Ryan, thank you both for being here today. I learned a ton on this conversation about the retail leasing world and what's important and what the future may hold. For those watching, please be sure to subscribe to learn more tips and tricks on how to grow and operate your retail investment portfolio.